a lot of people kind of caught off guard by what the Fed did yesterday, not in terms of raising 75 basis points, but Jay Powell saying that, look, we're going to be looking at a longer time of higher rates. The terminal rate now 4.6%, maybe 4.7%. It surprised a lot of people on Wall Street, but did it surprise you?
Well, not really, but I think what the Fed has is three powers. They can increase interest rates, they can telegraph what they're going to do, and they can explain what they have done and are about to do in the future. And what yesterday was not so much the surprise about the 75 basis points. I think that was telegraphed in advance. But what Jay Powell was saying is they're very serious about getting the inflation rate down to roughly 2%. And to do that, what he's saying in Fed speak is that the unemployment rate is going to have to go up much higher than it is. It's about 3.7% now. He didn't say this, but it probably will have to go to about 5 or 6% before inflation can get down to 2%. And that's the message that the market received, that the Fed is very serious about getting it down to 2% in the foreseeable future.
We've had a running debate about whether the economy is really starting to suffer from these higher rates or not. And the answer to that depends on where you sit. We've gotten various answers. Anybody who's involved in housing and real estate have said, yes, the pain is here and it's here pretty deeply. We're feeling it. Other places say, no, he's got to keep raising interest rates. You've got a lot of different businesses that you see through Carlyle. What are your thoughts on how the economy's faring and whether it can, or whether we need to see more interest rates to bring down inflation?
Well, I think interest rates will have to get higher to get inflation down. I don't think we're in a technical recession right now, which is to say another quarter of negative growth. I do think that the third quarter will be positive growth, but we're in very low growth range, let's say 1.5%, 1.5% growth or something like that. Europe, I think, is not in good shape. I think Europe will more likely tip into a recession before the United States does because of the higher energy prices they have to deal with compared to what we're dealing with now. But I do think that Jay Powell's main message yesterday was we're going to be coming back again with higher interest rates. And the market had before yesterday thought that maybe next year the Fed would stop increasing interest rates. And the big change is the market now is fairly confident that the Fed will increase interest rates early next year as well, and not just pause for a while or even lower interest rates, which what some people in the market thought would happen early next year. It's clear from Jay Powell's statement that that is not going to happen. They're going to probably have to increase interest rates again in the first quarter of next year.
What are you seeing? Where do you see inflation? How persistent do you think it is? Why do you think rates have to go a lot higher to shut that off?
Well, the only way to really deal with inflation is increasing interest rates of the available toolkit that we have. And it's clear that when you increase interest rates, inflation will come down over a period of time. When I worked in the government, Paul Volcker showed that very clearly. That produced a great recession in the early 80s. And I don't think anybody wants anything like that again. And whether the Fed can engineer a soft landing or not, a so-called soft landing, which means avoiding recession, nobody really knows. But I would say most people on Wall Street today think it's very difficult to avoid a soft landing if the Fed is going to get inflation to 2%.
Let's just talk about specifics in business, though. And I'm asking this just because we're trying to gauge as many economic data points as we can. We had Barry Sternlicht on with us earlier, was it this week or last week? He was talking about how things are really starting to roll over. You see the pain in the housing market. You see pain in places like airline prices that are already starting to come down. He said hotel rates, you can see them starting to roll over, too, that things are happening much more quickly than the Fed may realize. And I just wonder what data points you're watching in your own businesses in terms of if you come down on the side of inflation still being a big problem, where do you see that inflation? Where are the real numbers? Is it in labor? Is it in input costs? How does it play out?
Well, there are many different factors. Labor prices are going up, there's no doubt, because there's a bit of a labor shortage, and therefore prices are going up to get good labor. There's no doubt that the supply chain is not as strong as we'd like it to be or as efficient as we'd like it to be. And as a result, you're paying higher prices. And generally, there's a lag factor. So it takes a while for the market to catch up to the reality. And I think we've had inflation for a while, but now the prices are going up a bit, reflecting what's happened 3 or 4 months ago. At our firm, we take the several hundred companies that we have and extrapolate their quarterly sales, their earnings, and their performance, and extrapolate it and compare it to what the U.S. government is doing or the U.S. economy is doing. And over a period of many, many years, we have found there's some correlation between how certain companies perform and how the U.S. Economy is performing. And right now, I'd say we don't see a recession imminent right now, but I can't say it won't happen in the future. And I I think it's likely that the Fed will not say they want a recession. They don't say that. They never say that. But they know the only way to really get inflation out of the system is to jack up interest rates. And that inevitably will produce probably a hard landing. They won't say that, but probably something between a hard landing and a modestly hard landing is what they would like to get. If they can engineer a soft landing, that'd be wonderful. But nobody really thinks anybody is that good at engineering how to get interest rates up and inflation down without having some type of recession. That would be a very difficult task to do.